Well, hello everyone. It's me, Bradley again, and I'm back for another video. So, about 2-3 days from the time of recording this, I uploaded a video talking about Jake Paul and his ill-advised cryptocurrency investments. I wasn't planning on talking about crypto again so soon. I was actually kinda interested in an article that came out about Amazon and how their awful labor practices have basically put them at risk of running out of employees. But I had to come back to cryptocurrency because in the few days last few days, stuff has absolutely gone insane. If you haven't been following the news, here's the deal. Bitcoin's price is in a free fall. And that might not sound like something unusual because you've probably seen it. Bitcoin has a thing where it always will crash pretty often, but it generally goes up. But here's the thing. But what's different this time is that it's far worse than normal. Just on June 18th, the Bitcoin went down to below 18,000 per unit, and it still seems like it's dropping. This is a historic low, and it seems to be spilling over to other cryptocurrencies. Ethereum is below $900 per unit in value right now. It's still dropping. A potential 60% drop in value is predicted. And you're probably wondering what caused this crash, and it's kinda complicated. It seems like there's a lot of factors that wouldn't have had a major effect on their own, but have kind of just converged together to cause this. And some of the panic that's been causing it seems to be making it even worse. So there's been rising interest rates. That's been happening since February as part of an attempt to deal with the effects of inflation. There was the Luna Terra network, basically a plan to create a stable crypto coin that was very ambitious, ended up failing, and basically caused a lot of people to lose huge amounts of money. Bitcoin mining is apparently becoming unprofitable. It's just basically part of it's rising energy costs, and just that with everyone doing it, it's very difficult to actually make enough. And furthermore, a lot of countries are proposing new regulation. India in particular, they've actually had a bill that might end up completely banning Bitcoin in the country. That's kind of been debated for a while. And what really characterizes this incident, at least in my opinion, is just how the cryptocurrency is reacting. We've seen a lot of big price crashes, and you usually see some panic, but generally the majority of them are not really too affected. But this instance, there's been panic on all levels, from the actual infrastructure to the communities of wannabe investors. What we're about to look at here is the coin exchange fiasco that's been going on, aka the week of convenient technical difficulties. First one there is Celsius Network, a coin exchange that's generally very popular. This coin exchange froze on June 14th, citing extreme market fluctuations. Now, part of that might seem suspicious to you because, if there's been extreme market fluctuations, wouldn't you want to have, your ability to sell or buy crypto, going so that you can deal with that? Well, you would if you were an investor. However, if you're a coin exchange company, then having a ton of people rushing to sell off their things and basically making you pay them for the assets That is bad. So this is pretty much just getting people to try and stop withdrawing money. It appears to be one of the things that has accelerated the crash, and it's led to a huge amount of frustration. We're feeling that Celsius has kind of done suspicious stuff before. A couple months ago, they introduced this thing called HODL mode. Yeah, that's the actual name for it. HODL mode is basically supposed to be a security feature. If you think that there's been some suspicious activity on your account, or that it might be at risk of hacking, you activate HODL mode and it'll temporarily freeze all transfers until you go through an authentication process. It sounds innocent in theory. However, there's been a lot of reports of people who say that HODL mode was automatically activated for some reason on their accounts when they hadn't even considered like turning it on. And the general theory a lot of people had was that if there was going to be a really big crash, then Celsius would use this HODL mode feature to effectively disable a ton of accounts trying to withdraw money, and then afterwards just claim that there was like some technical issue causing it. And we're finding that Celsius has been trying to do PR damage control recently, but their user base is just not buying it. Next, there is Binance. Binance is one of the largest, most important exchanges in the world. It banned all transfers on June 13, which is a huge amount of people who just can't liquidate their assets right now. Then there's Coinbase, they're really big crypto company. Right now it doesn't seem like they've had any freezes yet, but on June 15 they announced major layoffs, and that's pretty suspicious because it points to there being a lack of revenue coming in, or at least negative, at least that they're not making profits with the amount of people withdrawing right now. Then there's Tether. Tether is something that doesn't seem to get as much attention as it probably should. It's supposed to be a stable alternative to other crypto coins. It's controlled by a company called Tether Limited, which itself is controlled by another larger cryptocurrency company. Now, Tether itself doesn't seem to be fluctuating as badly as the others, but the market cap has apparently been dropping from about $1 billion a day for several days. The market cap yesterday was at about 68.2 billion. And if it continues at this rate, they're going to eventually reach a point where they're no longer liquid. And when that happens, better hope you didn't have enough invested with them. Now, a lot of the stuff now this is just really not good news, because this is stuff that, while Bitcoin and other cryptocurrencies are supposed to be decentralized, in practice, the vast majority of exchanges with them come from these large coin exchange companies, and if they're all shutting down or trying to get people not to sell, then that effectively means the infrastructure to make all these transfers is falling apart. And this is starting to drivel down to the sort of community of investors. So a good barometer for this is the cryptocurrency subreddits, and the thing with those is that they're usually very heavily moderated. Most of them have explicit rules against posting what they call FUD, which an acronym that stands for fear, uncertainty, and distress, or fear, uncertainty, and doubt, depending on who you ask. And a practice that just means any person who's just claiming that cryptocurrency isn't going to do as well as they want it to. But recently, there's just been the monitor seems to be completely swamped. Well, not completely. There's a few things, but you can see in almost all these subreddits that there's a lot of negative feedback going in on the front pages. Tons of people talking about how they're losing money, how this doesn't seem like it's going to be going good, and there's some trends they're seeing that show a big change in behavior. Like, one thing you usually hear talked about on cryptocurrency groups is buying the dip. Basically, whenever Bitcoin or Ethereum's price goes down, you want to buy a lot of it then. And that way, so when it goes up when it goes up again, you'll get money. Now, at first this just sounds like buy low, sell high, which is just the general rule of stocks and investments. But the thing with the crypto, but that misses a pretty important part of the attitude of these crypto communities, which is that you pretty much always want to hold on to your crypto assets for as long as possible because it'll always be going up. Is this what's always going to happen? No. But it's the general attitude there is that you should never first sell your stuff, even if it looks really bad, because it'll always be going up, and eventually someday it'll be worth it. Of course, this is kind of based on presumptions that it'll just keep going up forever without any real reason to back it up, but it's what passes there. However, in this class, you're seeing a lot of people explicitly discouraging people from doing that. People are getting less confident that it's going to recover. Also seeing people discouraging taking out loans to buy Bitcoin and others, which is at least some common sense going through. Overall, this might not seem like much, but it's some of the first backlash we've seen. And, oh yeah. So you know how I said the moderators weren't completely swamped? Well, here's what's happened. There's apparently you've been seeing a lot of people have been getting really distressed over this thing. And there was post recorded where people posted a suicide hotline in case people felt a risk of they were at risk of harming themselves over this. Those posts were removed. It's been, well, I guess, real classy move there, guys. So, here are my personal thoughts. I really think that this was pretty much inevitably going to happen eventually. The thing with Bitcoin is that it can never really become a real currency if its price is always fluctuating like crazy. People always talk about the price going up as a good thing, but really, even if the price is going up in estimated value, that's actually discouraging people from using it for transactions. Because if you buy something with Bitcoin for, say, amount of Bitcoin equivalent to $100, and within a week the amount of Bitcoin you used was now equal to $120, then you just lost money. So even if you see companies putting in all sorts of, even if companies try to introduce things where you can buy stuff with Bitcoin, there's not much there's really a strong incentive not to use them whenever the price is going up. And as soon as they start losing money when the price goes down, like what you saw with Tesla, then those options will almost always be closed very soon. and really the majority of crypto transactions in terms of like the actual amount of money being exchanged are done just for like are basically done as stock market investments. People buying Bitcoin to have Bitcoin so that when the price goes up they can sell it. And usually a lot of these people will just hold on to it forever, even if the price starts going down, because they think that someday it'll go up to $1 million and they'll be set for life. And I really don't see a way out of this for like any of the currencies that exist. There are like some coins that aren't really used that are sort of viable, mostly because they aren't used as stock investments, like Monero. Of course, those do have their issues, but really, they're not what most people focus on, because most people are trying to like strike it rich, and so they'll keep going with this. Whatever theoretical value blockchain tech has is really just irrelevant, because the way that it's currently used, it just can't work for anything. As for like the side effects of this, I don't really think this is going to have a huge impact on the economy. I do feel that, however, that there is going to be a big impact on certain amounts of people who had a very strong impact on specific like groups of people who had like put a lot of money into Bitcoin, because while most people are just not going to have much affected, you'll see a lot of people just maybe lost thousands or even millions of dollars on this, and I'm not sure what the knockoff effect of that will be. I guess we'll just have to wait and see. So anyways, I guess that this is mostly it. I'm pretty happy to have a second video out now. This one I made with a script, which seems to have made things a lot easier. I also made sure to try and like separate the direct fact of this and my final analysis more. The next video is probably going to be about the Amazon story that I just mentioned, since that story seems to be really interesting and just a really good subject to cover. But you know, maybe I'll find something else, or maybe I'll just make another main video before I move on to a long form one like this one. We'll just have to wait and see. Anyway, so it's been good. Like and subscribe, and I'll see you all next time.